As a career estate planning attorney, I've worked with a lot of real estate investors. And if you're a real estate investor, one of the things that I know you've come to terms with is just the risk that's inherent in market volatility, and also in just keeping a consistent income, keeping your capital. And so the good news is that there are ways to mitigate this risk using a properly designed whole life policy and adopting what we often refer to on our channel as an infinite banking strategy. There are other names for it. And I want to introduce Denise Bavier today. She is going to talk about a real life example where she helped an Airbnb investor who wanted to put her real estate proceeds into properly designed infinite banking policy. So let's jump in with Denise and hear this example, and then I'll be back after that to summarize the main points and to offer some next steps to you if this applies to you. Take it away, Denise.
Hi everyone, Denise from Insurance and Estates here with you today. Thanks for the introduction, Steve. Most people love the concept of what is called infinite banking or high cash value life insurance. And the glory of these policies is that the majority of your funds are liquid and available to be used for whatever reason the client sees fit. I want to share a dynamic case study to give people watching just another idea of how these plans are used on an ongoing basis. So I have a female client, age 41, who came to me looking for a policy that could hold her Airbnb rental income so that it would accumulate and be available for any maintenance issues that may arise, or even eventually to expand her Airbnb holdings and add additional properties. She wanted something that was not at risk of any market downturns, and also something that would have a stable, dependable growth, and that her funds would be quickly and easily accessible when needed. The fact that her cash values would be growing tax-free was an added bonus, and also that she would continue earning interest and dividends on any loans that she implemented. She also loved the fact that she would be in total control of determining how she wanted to pay her loans back. She could decide the amount, the timing of her payments, and even the portion, or even have the option of never paying it back. So let's look at how all of this played out. As I mentioned, she's a female, age 41. She's in preferred health. Her Airbnb income is currently $7,000 a month, or $84,000 a year. She mentioned that she'd like to have the option of stopping her contributions at the age of 63 and consider taking income from age 64 to age 90. So here, as you can see, her premium payments are $84,000 a year. She's putting $84,000 in from year 1 all the way up to age 63. The nice thing about the premium payments is that her minimum premium payment is only $1,939 a month. Her maximum is $7,000 a month. So if for some reason she doesn't rent out her Airbnb, and maybe during COVID this might have happened, she would have the option just to pay the minimum of the $1,939 a month. She's not committed to the $7,000 a month. If she felt it was going to be a prolonged period of time, she could even choose to implement a premium offset, basically where her cash value would pay that basic $1,939 a month. It would come out as a small loan. And then when she got back up and running, she could just continue paying that $7,000, maybe even catch up on the previous year through what we call a catch-up provision. She has a lot of options as well in that respect. So as you can see, there are not only many flexible premium options as far as the funding, but there's also a very strong sense of security. So if we just take a quick look at year 5, she has accumulated $393,000 in her cash value. She could easily purchase another Airbnb if she so desired, or she can just let it sit there and build for future retirement income. Again, more options. So she pays her premiums to age 63, and she can either implement what we call a reduced paid up option, and that is illustrated here. And basically that is just stopping the premiums They're going to reduce the death benefit from $6.4 million to $5.4 million, but no more premiums are ever due. Policy is paid up. With this option, her income from age 64 to 90 is $142,155. Another option would be to continue pumping in that Airbnb rental income, continuing the growth of her contract, and ultimately increasing her income long term. So as you can see, there really is a tremendous amount of flexibility with these policies that are structured for cash maximization. And I am going to now turn this back to Steve, and he's going to give you a quick recap. And I just want to thank you for joining me today, and hope to hear from you soon.
Thanks, Denise. Great example. So Denise's Airbnb client, age 41, she rolled her $7,000 a month in real estate income into her policy. She did that over 22 years and accumulated about $1.8 million in the policy. She then let the cash value grow. In year 5, she had just under $400,000 to invest in another property. This was guaranteed tax-free growth that allowed her to be able to predict that. Between the ages of 64, she wanted to be able to take about $140,000 a year in income. So the number showed that she put about 1.8 in and was taking about 3.6 out. So that's good. The other thing she did is she decided on a reduced paid up at age 63, and that allowed her to stop paying premiums into the policy at that point. She could have kept just rolling her real estate proceeds in there and just kept accumulating that guaranteed tax-free growth, but she had the flexibility to do the reduced paid up. So all told, a very powerful strategy, a predictable strategy for her. If this sounds interesting to you, there's going to be a link wherever you're watching this video to go ahead and schedule a one-to-one and look at your own numbers with Denise. And also, if you have questions, go ahead and add your questions to our comments section. We will respond. As long as you keep it classy, we respond to all comments. And with that, thanks so much for watching, and we'll see you in the next one.